Hello there, this is FairBinaryOptions.com, and this analysis is about the Great Britain pound and Canadian dollar, a cross-currency pair that it is moving quite aggressively lately after a contracting triangle on the daily chart that took more than a year, yes, more than a year, but now it is ready to make another leg higher as we have the CPI out of Canada behind us. We have Governor Powell speaking today, and he was actually neutral on the overall Canadian economy, saying that everything depends on the oil price and so on. And from a technical point of view, we are at, we are trading close to the 1.80 area, which is the beginning of an impulsive move to the upside from my point of view. Now that impulsive move to the upside is definitely not done here, and we should look for a fifth wave that is not completed. In order for that to be true, this would be a fourth wave. Let's say out of this degree, a fourth wave, and now we're looking for a fifth wave of the same degree. The problem with this fifth wave in here is that no matter how you arrange the waves or you try to look for logic, let's say in a five-way structure from here to here, there is none. Therefore, it can only be a terminal impulsive move, and terminal impulsive moves are having a five-way structure, but all waves are corrected. From my point of view, everything that starts from here like this and moves to the upside like this can be only part of a a double or a triple zigzag to the upside, and I would go with the following situation. This to be wave A, B, and then a C wave to the upside. A, B, C as the first zigzag. Then we need an X wave, but from this moment of time, if this is the ABC to the upside, we can already have an idea regarding the possibility of this double zigzag. Why? The double zigzag gotta end in a so-called channel created by the 0 to 2 trend line. So if you take a channel from here to here, and we project it in here like this, then the double zigzag gotta end around this channel. From my point of view, the double zigzag ended in here, and this will be the end of the first wave of a lower degree. Like this. Then definitely we need a second wave. I wouldn't say that the second wave is done here, because even in a terminal impulsive move, you gotta have an extension, and usually the extended wave is the first one. So most likely this is nothing but a wave A of a lower degree to end around current levels. And now we should look for the B wave of this same degree, something like this. That should go minimum 61.8 out of this whole move. But if you take a Fibonacci retracement and you try to find out the 61.8 from here to here, you'll find out that this one comes somewhere around 1.89. We are in 1.82, so a lot of room to the upside, a lot of upside potential on the pair. And therefore, I would like to trade call options here. Careful by the expiration dates, or careful with the expiration date, because we are now on the 20th of April, so a proper expiration date would be either end of month or if you want 1 week expiration date, but 1 week is more risky. So end of month, basically 10 days from now, this should still move higher. So let's write here that I'm looking for call options with end of month expiration date for the Great Britain pound and Canadian dollar. Thank you very much for being here. FairBinaryOptions.com. We're looking again at a bullish scenario, namely a leg of a second wave in a rising wedge. Bye bye.